is Allianz Chief Economic Advisor, Mohamed El-Erian. And Mohamed, one of the things that Steve just mentioned in his report was this commentary, this quote that came from JP Morgan, where they said that there is upside risk to the second quarter, which is strange phrasing. You would think upside potential, downside risk. But there are a lot of different economists and other people who are market watchers who are looking at this and saying, hey, maybe we misunderestimated, to use another phrase on this, how quickly things could reopen. What do you think based on what we saw in Friday's report?
I think you have to ask yourself that question, Becky, and thank you for having me this morning. It was a very surprising report. As Steve said, it was perhaps the most shocking positive surprise for markets and the biggest miss for economists. So you have got to look into that. The complication is you have not two, but three factors. You've been talking about two. One is it reflecting the economy picking up quickly? Two is there something about the data? But there's a third one, the impact of government policy. So both policymakers and economists are continuing to scratch their head, and they're going to have to err on one side or the other of an uncertain balance. Markets are completely different. It confirms the win-win. And this win-win hypothesis, I win if it's a recovery, and I still win if it's not, because policymakers will do more, has powered this market in a really impressive way and will continue to do so.
That's an interesting point, Mohamed. And just based on the idea that now so many people are saying, well, wait, maybe things weren't as bad as we thought, will that in itself prevent policymakers from coming back and taking additional steps? There have been all these questions that had been asked about whether the unemployment additional wages would be extended past July 31st. Does that make it less likely? Does this make it less likely that the policymakers will go ahead with that before they wait and kind of see what the fallout might actually be?
So think of fiscal and monetary. On the fiscal side, that question is really live. And I think the Republicans are pushing back, saying, let's wait, let's see what happens. Let's not put more money into this economy. We've already borrowed 15% of GDP more than we had anticipated. On the monetary side, it's more complicated, and we'll know more on Wednesday. But if the Fed maintains its insurance mindset, remember that word, insurance mindset? I've got to insure the economy. It will not be derailed in any major way from what it was thinking. So we're going to see, again, a distinction between monetary, which serves the markets mainly, and fiscal, which serves the real economy mainly.
So what would you advise people at this point? If the fiscal is at this point kind of thinking, okay, that we may not see additional fiscal stimulus, at least not until there is more fallout proven to really be hitting the economy hard, what would that make you do in terms of looking at the market right now? Do you think that the market is getting it right? Or is there room for a pullback if it looks like there is a lot more damage and that the policymakers did not step in?
So let's start with the policymakers first. I think it would be a mistake to simply say everything is fine and let the economy recover on its own. I think what you need is to evolve your approach and evolve it in three ways. One is focus much more the relief measures, including in a pro-growth manner. So enough of the universal support. Let's now focus on the most vulnerable segment and do it in a pro-growth manner. Let's make sure we can live with COVID, because this is the phase we're in, better. And let's prepare for what's after the COVID economy so that we don't get hit by lower productivity. On the market side, narratives matter a great deal. And I've gotten this wrong, Becky. The narrative has been win-win. You win if you look through all the bad data and you bet on a massive recovery, and you still win because the Fed will come in and support you all the time. That narrative is so deeply embedded now that it takes a major shock to change it. And that's why you see these markets continuing to go higher after last week's really impressive gain that came on top of a few weeks of really impressive gains.